Our next guest says last week's sell-off relieved some pressures in the stock market, but didn't solve its major problems. Here to explain is Laura Calvasina, head of U.S. equity strategy at RBC Capital Markets. Laura, it's always good to see you. We talked the day of the sell-off.
Yeah.
And now with retrospect, you say that a short-term bottom was probably put in place. But what are some of the issues that the market still has to deal with?
So, I was surprised on Friday. We got the CFTC data, which gives you a good read on U.S. equity futures positioning. I think I checked the file 10 times, looked to see what other people were seeing. My data was right. We didn't really see any improvement in futures positioning. So we still look like we're pretty crowded, including in things like NASDAQ futures. I think seasonality is also really treacherous this time of year, and we've got a lot of uncertainty around the election. We've got new economic policies supposedly being dropped later this week. And then I think we're going to come back after Labor Day, and investors are going to be wanting a lot of information from companies about how things are going in the economy, how things are going with consumers. One of the things I remember, just in recent years, companies don't like to give a lot of information that time of year. They really kind of push off and don't like to give a ton of forward guidance. I'm a little bit worried about that as well.
We will, though, get information about the consumer, just not after Labor Day in September. We're getting it now with earnings season, and we will get sort of what could be the lifeline for the AI trade when NVIDIA reports, because we have been in sort of a data point vacuum since the hyperscalers reported. So couldn't that be enough to sort of get us through that rough period?
I think, it's a question of have we bottomed? I think 8.5% was enough if we don't have a full-on growth scare, but are we going to have the all clear? And I think in my mind, we can sort of, have that be the low, but still chop around for a bit and not necessarily break new lows. I will say on the AI thesis, I think one thing that was unnoticed in this reporting season is that, not the major mega cap tech companies, but if you look at sort of, your everyday S&P companies who are the end users of AI, there are some pretty good examples of actual use cases, that were being discussed. And I think the street completely ignored that.
Yeah. You like the defensive sectors better in this environment?
I like value sectors better. We've looked at utilities as an overweight. That one we're still overweight. It's gotten less interesting on valuations, so we're still overweight there. But I would say my attention shifted more to things like financials right now. We're still overweight energy. Obviously, geopolitics are a problem. We always like having that in our back pocket. But the financial valuations have improved and utilities have gotten a little bit worse. So I might shift from the latter back to financials.
5,700 is your S&P target for the remainder of the year. Sticking by it.
Yes.
What is the rate cut backdrop that needs to happen for you to achieve that?
So, it's funny. Our rate strategists are probably, not looking for as many cuts as some of the others on the street. And in part, they think that's because the economy is going to muddle through. Our modeling, when we went through, and I'll spare you all the details on the model, but we basically felt like if you looked at 55 to 5,600 on the S&P, those kind of highs we had a little above 5,600, that was already baking in, say 3 or 4 cuts from the Fed, some pretty benign inflation data, around 2% on PCE is what we modeled in. So we think, kind of returning to kind of those highs is appropriate, for the rate environment most people are looking for.
So it doesn't really matter what CPI does today?
I hope not. I mean, we'll see. I think I agree with the idea that we've kind of moved away from living and breathing every inflation print. Now we're all focused on labor. I think there's a lot of confusion over that jobs report that came out a few weeks ago. So I think people are going to be really attuned to the claims going forward. We certainly are as well.